First, let's just break down what taxes are and why we have them, okay? A tax is a required payment to the government. You have to pay it. If you don't, there will be bad consequences and stuff. Now, why on earth do we have to pay taxes? So the government can pay for stuff. Now remember, as I said in a previous video, the purpose of the government is to protect society. More specifically, to resolve conflicts, defend a society from other societies, or provide public services. That costs money, and they need to get that money from somewhere. What are they gonna do? Borrow tens of trillions of dollars to pay for everything? But seriously, they do that too. Now remember, in a democratic society, our tax dollars should ideally go where we want them to go. Understandably, many get upset when this does not happen.
Taxman!
Taxman! Taxman!
Listen, I'm a big supporter of fixing potholes and erecting swing sets and building shelters. I'm just not such a big fan of the percentage that the government uses for national defense, corporate bailouts, and campaign discretionary funds.
Regardless, let's go through all the major types of taxes that governments typically collect. Okay, first, let's look at consumption taxes, or taxes on the purchases of stuff. Number 1, sales taxes. A sales tax is a tax on sales. Yeah, since that definition didn't help you whatsoever, it's a tax you pay when you buy something. Usually, whoever is selling you stuff can collect those sales taxes the moment you purchase the stuff. That's why when you buy that hat for $9.99, you actually end up paying $10.79 at the cash register. That additional 80 cents is the sales tax. It's important to note that this is on final goods, or goods meant to be sold to your average consumer, as opposed to intermediate goods, which are goods bought to produce other goods. Nearly every country in the world has some form of sales tax. Now, there are different types of sales taxes, like turnover taxes, where there are taxes on the sale of the aforementioned intermediate goods, or taxes on the sale of specific types of items, like the wholesale sales tax, a tax on the sales of wholesale goods before the goods are sent to retailers, or luxury taxes, taxes on stuff not considered essential. But that's enough about sales taxes. Let's not get into the weeds too much here. Next up are taxes on property. Woohoo! Number 4, property taxes. A property tax is a recurring tax paid based on the value of the property we own. Typically, it's on real estate, like land and buildings, but also personal property, like vehicles and equipment. At minimum, we usually pay property taxes once a year, and if the value goes up on our property, yay, we get to pay more property taxes. But if the value goes down, yay, we get to pay less property taxes, but boo, our stuff is worth less, so that sucks and stuff. Governments may also collect property taxes when the property changes owners. Oh, and by the way, property taxes are the single biggest source of state and local revenue in the United States, funding things like schools, roads, the police, and other important services. Number 7, income taxes. This is probably the tax that most of you complain about the most. An income tax is a recurring tax on your income, or the money you make. It's the main reason why your paycheck isn't as high as it should be. But it's not just on wages or salaries, it's also on other forms of investments an individual or household earns. Now, there can be expenses and deductions that lower the amount of income that's taxed, and that's why filing your income taxes can get quite tricky to a point where many hire someone to file their income taxes for them. The vast majority of income taxes are, quote, progressive, meaning tax rates increase as a person's income increases, meaning they end up paying a larger percentage of income taxes than those who earn less. Typically, a progressive tax system has tax brackets, so different portions of your income are taxed at different rates. The rate you pay on the last dollar you earn is often higher than what you pay on the first dollar you earn. Governments always start at 0 when calculating. In the United States, there are currently 7 different tax brackets brackets at rates of 10, 12, 22, 24, 32, 35, and 37. Most Americans don't ever have to worry about paying more than 22% of the last dollar they earn. Okay, enough of that. Some places have a proportional income tax in which the tax rate is fixed, so you pay the same percentage no matter what your income is. Now, if you are self-employed, you often have to calculate your own income and pay the government directly. Employers often collect payroll taxes. So how do the richest citizens get out of paying so much in income taxes? By reporting a lower income, of course. But there's another way that we can get their income. Number 8, capital gains taxes. A capital gains tax is a tax on the profits on the sale of an asset. Often this is through the sale of stocks, bonds, precious metals, or cryptocurrency. Even antiques can be subject to a capital gains tax if you make enough money from them. The capital gains tax rate depends on how much profit you gained in a given year. It is far more common than a wealth tax, mostly since it's easier to keep track of. However, often wealthy folks just hold on to assets. They don't sell them, so that's why some argue a wealth tax might be better to generate more money.